Guys, I hope you are having an amazing Sunday. Uh, so I was just going through some stocks and screeners and found a good opportunity that I think is on a great level. And so I checked out its fundamentals and its chart. So it is looking promising to me. So thought of like sharing with others and have a discussion and get the feedbacks if any, or just to transfer the knowledge. Okay, so we'll talk about a stock which is like corrected 50% in last 1 year or something. So yeah, so that particular stock is looking good to me. So we'll have a discussion around it and see what are the pros and cons which are looking right now, and uh, what are the story behind this. So we'll directly dive into the stock right now. Okay. Okay, so the stock what I'm talking about is Avas Financials. So basically, what does this company do? Basically, this company deals with the home loans and financial loans and all of those things. Generally, a bank would do. But the major difference between any bank like HDFC Bank or any big bank and this Avas Financials, the 70% of the revenue that comes to this company is from the retail class or middle class family loans. So the corporate loans is not does not give a big chunk to Avas Financials, whereas in HDFC or ICICI the corporate loans are bigger chunks. So we'll talk about it, why that matters, and is it good or is it bad. So today we'll dig deep into this, and both from fundamental perspective and from the technical perspective. So firstly we'll discuss the fundamentals. If it looks fine, then we'll move to the technical. So to me the fundamentals looks fine, but we'll have a discussion and let's start. So Avaish Financials, so this is the price right now for this stock 1574. So from the last 1 year it has been corrected around 30%, and almost it's corrected 50% if we see a bigger picture. So what is happening behind this? So we'll check. So let's dive directly into the next part. So what are the financials of this stock? Okay, so firstly, let's not get scared with the complete picture. We will not discuss everything with just a surface area knowledge. So we'll see the EBITDA and the total revenue. If any people who does not know about the EBITDA and everything, it is nothing but the ratio which gives you the profitability of a company. So if your EBITDA is growing, if your EBITDA is healthy, the company is in a healthy shape. That is what we can take reference from EBITDA. So let's look into the revenue. The revenue is steadily increasing from last 4 years. I've checked the behind data also. The profitability and revenue is steady, except the 2022 crash. So yeah, this 903 crash. Okay, EBITDA is also looks fine to me. There is one thing I want to show you guys, that is EPS. So yeah, EPS is basically earning per share. So if we see this value from 31.84, it is steadily increasing and it has reached already to 54. So the growth looks fine to me. There is no doubt that the growth is not happening, or the profits are not coming in. The profits are coming in definitely, but the major concern is whether this particular growth is appearing in the stock prices or not. I doubt. Till now it has not appeared in that. So we'll see in the PE comparison. So okay, yeah. So this is another thing about the fundamentals, that I generally check the assets and liabilities on any company, because there might be a chances the EBITDA and PS are growing, but they are taking too many liabilities, like in case of Adani and everything. At Adani and certain companies, they take the loans and keep on increasing on loans and everything, and by that they increase the profitability. So I don't want a company which is showing the profitability in books but keep on taking loans from here and there. So if I take have a look on the liabilities first, the liability is increasing, no doubt. That is one of the red flags. The liabilities are increasing, but we need to understand in which sector this company is dealing in. Basically these are dealing in loans and money giving business, right? So basically this company has to have the liabilities, and but this is one point. And if I compare it with the total assets, the good part is the assets are also increasing, not aggressively, but yeah, the company is building the assets steadily, just like the profits. So that is a good part. Aggressive growth does not retain, like if this value have been increased from 7,000 to 17,000 or 28,000, I'll be a bit cautious, but the steady growth looks fine to me. Okay, so these are the two things I generally check in the fundamentals. One more thing we can have a look on is total common shares outstanding. So what is this basically? How many shares are floating for any company? So if you see this value is steady. So it should be steady. If this value is getting increased too frequently and too volatile, no, it is not good for a company, because basically what it will be doing, they are basically giving ESOPs or anything, and they are basically increasing the investors and the owners of the company. So that is not good in the long run. In the short term it might profit, but that is also a positive point that I see in this slide. Okay, so next is peer comparison. So basically I wanted to have a comparison. The fundamentals looks good to me on an individual level, but I want to have a comparison with any other company which is in the same sector. So I'll pick the PNB Housing. So when you see the price chart from for last 1 year, the prices of PNB Housing is increasing like good, but the Aavas is instead dropping the price. So why is it? Because we just check the fundamentals, and I also check the fundamentals of PNB Housing. There is, if Aavas fundamentals are no way worse than the PNB Housing, it is definitely better. So I'll show you an example. See this PNB Housing details. If I talk in terms of this slide, basically we have lower industry revenue growth, whereas in terms of Aavas, this all these three arrows were up, and they were doing good. The market share of PNB Housing have decreased from the last 5 years from 4% to 3.11%. That is a point of concern, why the market share has been decreasing. And yeah, so basically these the stock is not doing good, but still people are betting on it and increasing their price. So that should be considered with Aavas also. So if any sector is growing, if if companies inside a sector is growing and any one company lags behind, but the fundamentals are good, then definitely in some time or any time the market will realize the potential of that stock and it will boom from there. So that is what I wanted to say in terms of peer comparison, that Aavas has the potential to move up from here. Okay, so this is the most interesting slide I want to show you guys. Just have a look on this. Okay, so I'll just put it here so that it doesn't block. Okay, so check the mutual fund holdings history. It was kind of consistent for the March and June quarter of this December 2012 22, but after that suddenly we see a blast in this. The mutual funds are increasing the holdings in this, like see the percentage increment from 5% 7%, then in June quarter, then the latest quarter from 7% to 16%, almost double. So in terms, it might be in the terms of retail this percentage might not make sense, but in terms of mutual funds and FIIs, these guys buy in bulks, so this percentage is quite good. So they are buying aggressively. That is one positive point for this company. Next is FIIs, obviously. So the until March, the holdings was quite consistent, even slightly dipped, but in the March quarter and now in June quarter, see the upside. So they have bought big chunk of the Awas in this June quarter. So have it already been reflected in the price? No, definitely not. The price haven't moved and it is still in downtrend. So there are chances that this buying should impact the price now, because whenever buying comes, the demand appears and the price moves up. So that is how demand supply works, right? So this buying should impact the price now, and while the big players are buying this stock and you want to see what retailers are doing, just have a look. See, the retailers were buying in December quarter and September quarter, but now they are selling or they are quite steady. So that is why these big players make money and the retailers doesn't, because they got panicked too quickly when the shares have been fallen 50%, 30%. They just want to get rid of that, whereas these big players think oppositely. So they buy at a good value and then they move, then the price moves and they sell at a higher price, whereas we in FOMO we buy at the higher prices. So that is the problem with the retailers. Yeah, so that is the thing. Next thing is why I see a chance of growth. Obviously, I have shown you the holdings and the peer comparison, everything. Though those are all the things. But there is one more point that I want to point out regarding the fundamentals. See the price chart. The in March 2022, the price have boomed until up to 3,000. Now it has already been corrected to 1,500. So almost a 50% decline from the top. So, but the interesting part I want to show you guys is regarding the PE of this stock. Just have a look on this. See. The PE of a stock, this generally hovers between 40 to 60, somewhere in the range of, if I check the average PE of this stock is around 45. But right now the PE have dipped so much more than the dip of the 2020, the COVID dip. So right now the PE of this stock is down by that level also. So this is quite undervalued, if I say. So this PE should move up from here. So right now the PE of this stock is around 28 for trailing 12 months. So this PE should be picking up from here. That is what my understanding of this PE looks like, because this is quite undervalued. From 2020 crash is it's lower than that, and I don't see a reason why this undervaluation should be right, because the fundamentals are good, the company is growing steadily, they are increasing the assets. One point of view I already noticed, the liabilities are also increasing, but when compared with assets and the cash holding, they can square off that liabilities. That is not an issue, but in this sector the liabilities stays generally. So that is what I feel in terms of fundamentals. So that is what the complete picture of fundamentals looks like to me. In terms of my view, in terms of fundamentals, it is bullish, definitely bullish, because this undervaluation should be balanced. The market eventually balances things out, so it should move up. But before wrapping this up, the fundamentals are fine, and I think now we have to look at the technical part of this also. So whether the fundamentals are good, the price should move up, but whether we should take an entry now, or we should wait for a better levels. So let's dive directly into the chart. So I'll start with the yearly. So I'll generally use the demand and supply theory. If someone is aware of that part, so good. Otherwise, you can easily search for it, how that theory works on charts. So basically, you can see this is the demand zone, which have taken the price to all-time high. Okay, this is an yearly time frame. You can see here yearly, right? So it is an yearly demand zone. So what I do, I basically move from top to down. So we'll move down now from yearly, we'll go to the half yearly part. right? So half yearly, if you see, this is also a demand zone. See, this it is also in a half yearly demand zone. Oh, just a minute. I'll just, yeah. So what we are doing is, yeah. So this is also in half yearly demand zone. So let's move bottom. There is a demand zone quarterly also, and to my surprise, there is a demand zone monthly also. See this. This 4 base candle demand zone, we have this, and the price have already approached it and have started to give the reaction from here only. So the things look fine to me. And if I talk in terms of challenges in on quarterly, because the price is moving from like higher time frames, we have to check the challenges on higher time frame only. So this supply zone looks tested to me. So until this point 2542, there is no quarterly supply zone. But this is for aggressive players. So if you are a conservative player, we can check the supply zone on the bottom time frames also. So let's see. This one is tested. It's a supply zone. It's a proper supply zone, but price have already tested around 1800. So this can still work. I'm not saying that this supply zone would get break easily. This can hold price or give a slight reaction in on the downward side, but I'm not too concerned about this. The next would be 2200 supply zone. So that is something we need to take care of, or we need to trail the profit from there. And then after that, 2500, the biggest supply zone. So that is what the picture looks like on monthly. So if you are too conservative and buy stocks in big quantity and wanted to have a profit early on, this is the first supply zone that I look on weekly. It is without base supply zone. It's basically inside the it is created when the price approached the monthly supply zone last time. So it has been created that time. So you can start trailing once the price approaches this. I'm not I'm not suggesting that you should book complete quantity on this, because the price have a higher time frame support from all the time frames, so it should go up. So it should not be stopped here, but trailing is a tool that we can use to uh, make the profits more. If you want to have a video on the how we can trade, where I can show you separately. So after that, on weekly, there's this one not strong. It is also tested, and so this is the thing. This is around 2200. On monthly also, we'll see there is a supply around 2200. So that is something. So for if we buy here, okay, so there is no you can buy on current market price, or you can wait for a proper daily demand zone, because right now the price is consolidating. Why it is consolidating? Because it has hit this proper supply zone. It is a good supply zone on daily time frame. Can it reverse the price? No, definitely I don't think so that this demand zone can reverse the price, because the price has support from higher time frame. It should go up, but it is creating a challenge for the price to move up. The price has already moved up from daily EMA. Also weekly EMA is resisting, so that is why price consolidating right now. So it is the opportunity to enter in this stock, because I doubt this weekly demand zone the price is going to come again. So we should plan any entry on the daily or smaller time frames, or if this or if you want to buy on the CMP, that is also fine for me. That is it should not be an issue. These are some daily demand zones that can be that can be hold the price, but I doubt it can reverse the price from here. So yeah, so that is what the technical picture of this stock is. I hope I was clear, and why I am bullish on this stock. So what is the conclusion of this stock? This particular stock look bullish to me for for a tenure of 2 to 3 years. But yeah, I doubt that it is going to take that much time. In a year it should be going up. And if you are like quick in quick out type of person, you can take an entry from here, and after 2000 or 2200 you can start trailing and enjoy the rally up to the top. So I think that would be it. This video have already gone too much in length. uh, all right, that is what I wanted to share with you guys. I hope it was concise and it was to the point. I uh, thank you for watching.